Morning. Good morning, everybody. Give me 1 second. Get my goodies.
Hey, buddy, give me 1 second.
Get that volume turned down over there. Yeah, hello. I got a late start today, ladies and gents. It's one of those times where you turn your alarm on, and that's what happened with me last night. So, yeah, I do apologize for that. I was wanting to test this time frame out anyway. So when I got up late and I realized that I wasn't going to get to my stream on time, I thought, well, what a perfect time. It's Friday. Perfect time to try out the 10 o'clock a.m. Central Time time slot for myself. So I had a meeting / interview earlier as well. So that's why I'm waiting to do it now. But anyway, enough about me. Let me know if you guys, let me know as you guys pop in. Let me know if that you're here. Say hello. And if you have any specific tickers of any kind that you want to look at, then let me know. As always, I do focus on the currencies, but over the last year plus, I've really started getting a love for indices, U.S. indices, the Nikkei, a little bit of the German DAX as well, and gold and silver. Of course, they've been flying like crazy of late. Of late means the last few years, right? And even Bitcoin. So I have an algorithm that kind of helps me track all my fundamental sentiment analysis so that I can focus more on the technical side of things and time in my trades, right? So that's what I aim to do. Hop on to my charts over here real quick. It's up and running. Just figured I would briefly say that since we newer people to the show, being this is a later start time. So up and rolling here. To start with, what did they do? They had their presser last night after they kept their rates the same. Let me get that out of the way real quick. Okay, just looking back to yesterday or last night for me. Okay, interest rates remain the same, 0.75%. They did come out and flap their lips, and it kind of seemed like a little bit of a hawkish hold. Okay, I was actually doing some digging on the conference itself just to kind of get a little bit of a summary, if you will. And let's see here, Governor Ueda. A second. So yeah, 0.75% was the rate. They remained the same there. They did have a revised upward real GDP growth forecast for last year. Okay, they bumped it up to 0.9%. And 2026 will be 1%, is what they're saying. So mainly measures, okay, with the government, stronger overseas, backdrop factors, all that stuff. Core CPI, which of course is all items, minus fresh food. Projections were largely unchanged or slightly firmer in parts, revised up to 1.9%. With the BOJ maintaining confidence, underlying inflation will rise moderately, wage price virtuous cycle will persist, labor shortages will intensify, and inflation expectations will rise, which led the core inflation to align with the 2% target in the second half of the projection period. So they did reiterate, Governor Ueda and company, that they are looking to continue to raise the policy interest rate, okay, the 0.75%, and adjust accommodations if the baseline outlook materializes. With real there was one dissenter, Hajime Takata. Hopefully I said their name correctly. They did dissent because they wanted to go for a 1%. Okay, so they wanted to raise by 25 basis points. So one dissenter on that, and yeah, basically a little bit of a hawkish tilt or a hawkish shift. Now, as a result, get on the charts. Well, the yen just went haywire there for a bit, right? Big shot of strength and then kind of a retracement. So if I just drop dollar yen to a 5-minute time frame, there you go. I think it was about 180, 190 pip drop, something like that, just in that first 5 minutes. Let's go measure that range. Okay, the range was 183 pips. But then they turned around and had a sharp retracement. So it's basically just kind of dancing around in the middle as we speak. Okay, dollar yen. A lot of people were wondering if if it was intervention. Okay, we've been talking about intervention for the last couple weeks or so, but it doesn't seem like it, because to me, if this were intervention, guys, just think about it. If this were intervention, this would have likely had a continuation, a follow through down here at least. We didn't get that. We got that immediate pullback. So some people were talking about what do you call it? Like just like a test or a feeler position, if you will, right? So it's just basically reaction from the retail traders causing these big spikes. Now, obviously, the Bank of Japan could have very well, put in a big buy position for the yen, just to kind of test it out. It's kind of a feeler position, if you will. So I don't think this was full blown intervention. I was watching some of my other colleagues talk about it as well. I think they pretty well agree, talking about the A1 trading. Okay, watching Trader Nick and company. I think they were kind of thinking the same thing. It doesn't seem like no full blown. This thing would have probably dropped 1,000 to 2,000 pips, right? 500, something like that. But it didn't. It just had that initial drop and then immediate bounce back, just kind of going sideways. This is a lot of confusion right here. Okay, looking at the dollar yen, everybody's confused. Like, what the hell are we doing? We had a 200 pip drop almost, and we retraced half of it. What the heck are we doing, right? So at the moment, I feel like this is a little bit on the fair value side. Just really this whole sideways move after the rebound, right? So, and the other thing I've noticed is obviously we had a ton of trading activity happen during that time. Okay, when you're looking at the volume spread analysis candles. But after that, after the first half hour, it kind of went back to normal. If we're just strictly looking at the trading activity, the volume, right? The volume spread analysis. So yeah, just kind of a lull, kind of a doldrum, if you will. And people are just kind of evaluating and seeing what the heck we want to do. Where's the next move going? Is it going up or down? We don't know. We don't know that. But yeah, needless to say, hopefully everybody stayed safe on that release. This was at 9-something p.m. my time here in the States. When I was side for me, as far as a combination of the COT report, the retail sentiment, talking about sentiment analysis, and then obviously not to mention the economic releases, the high impact, medium impact for the dollar and the yen. So it's just kind of hanging out in neutral territory. But despite that, I didn't have any interest in getting this position, but I did want a demand zone down here. And, just wicked right through it. So this right here, perfect example of why not to trade news. Okay. I stayed safe. I didn't get into this trade, but it doesn't care. Supply and demand. I mean, the supply and demand zones, as strong as they are, and as much as I love trading supply, hey, when those releases come out, I just let it go. Just let it do its thing, because it's probably going to did here, chew right through that demand zone I was looking at. Okay. In general, I think economic releases and things like that, I think they, when it comes to supply and demand zones in general, when a release comes out, it basically speeds up the process of what was going to happen anyway. By that, well, supply and demand zones, that's where unfilled orders are. Okay. And around those zones, double bottoms, double tops, things of that nature. That's the true move. Footprints from the big banks and the titans on Wall Street, right? The financial institutions. So that's ultimately what I like to do. That's ultimately where I find my success, is trading those zones. But no matter how much I like it, no matter how much of an edge I think I have, that right there, what you see on your screen, is why I stay away from it during the news, because it'll just wick right through it. I don't care about my zones at that point, right? So anyway, just basically letting the dust kind of settle. It looks like it has from a volume perspective. Okay, and an easy way to kind of see if we're back to normal is just, kind of measure the recent candles, volume spread analysis candles, to the candles from the previous day, the previous, period. see those things are back to normal. Okay. So, I mean, ultimately, the goal would be to get break and a close above the top or the bottom, whichever one it decides to do, somewhere in this area, and then ride the wave. But again, dollar yen, it's pretty well neutral. I don't have a place on it. I don't have a good reading. If I look at my top setups on my neutrals only, it's just sitting here at a +2. Okay, +1 on the technicals, the banks and the retail traders. And then obviously the eco score is a -2. So it's just not matching up, not interested in it. You do have a lot of people. In fact, I think you probably have a lot of people orders, right? So think about this. Okay, price, where did price ultimately bounce off of? The supply zone that I drew up the other day, right? 4 hours. Sorry about that, guys. It's my daily YouTube studio cutting in. Back to what I was saying. That's something that's potentially on the horizon. And I guarantee you, a lot of people sold. A lot of supply and demand traders had a limit order, okay, or a limit order for this supply zone. And as you can see, it's working out beautifully, is it not? Okay, that's a 4-hour zone, but let's just dig down a little deeper. Let's go down all the way to a 1-minute time frame, just to look at the action and reaction when it hit that area. Now, it bounced into that zone, just shortly before the decline. So guarantee a lot of people got in shorts here, looking for a bigger move, right? Yeah, I mean, yeah, you had people looking for a smaller move. When I say smaller, I mean, heavy intraday position, short swing trade position, but you also got some longer term swing traders and position traders into that area as well. Supply and demand zones, guys. These things are powerful. We're at the 160 level, are we not? We got pretty close to it. We missed it still by about half. So we basically went to almost 159.5. Not quite, but almost. So pretty good spot. If I'm trying to get a short to take potential for the intervention, it's not a bad spot. Now, another good spot might be this overhead supply zone a little deeper, a little further back. Okay, talking about this weekly supply zone up here. Look at this. Where's this weekly supply zone? It's just ahead of the 160 handle. Okay. So 160, 161 range. This supply zone right here. That's a strong decline if we're looking at it on a weekly time frame. It broke through all kinds of structures on the way down and ultimately broke this major structure down here. All that from that weekly supply zone. And there's a daily supply be that yellow rectangle. Okay, if I were to go to a daily, it would look similar to this. Okay, but very good potential. I mean, we don't like catching falling knives. We don't like stopping rocket ships. Okay, this thing's kind of a rocket ship. But if you're gutsy, if you got some guts, and you want to give this thing a big range, a big stop loss, 2,000 pips stop loss, 1,000 pips. Something like that, you could probably catch a 1-to-1 or a 2-to-1 on the way back down if and when the intervention actually hit. I don't have any interest in that because I prefer to stay on daily 4-hour zones. Trade with the trend. So once it breaks to the downside, then I'd be looking to potentially short it. But again, it's neutral. So what do we have for top setups overall? And I'm going to refresh this just to see if anything's changed. We have quite a few currencies on the board, guys. Quite a few currencies. I think we still have the DAX on the short side. We got gold, and then we got the FTSE is back on the list. So there's your Nikkei out of Japan. There's your FTSE. There's your gold, and then China 50. And then the Russell. I guess it's still on there as well. And then on the short side, actually, the DAX fell off. So a ton of currencies to choose from, a ton of currency pairs. A lot. Okay. Oh, let me get my thing put back up again. There we go. So So what do? Well, we look for the strongest scores. Very bullish, okay? New Zealand Swiss, pound yen, New Zealand yen, August, Nikkei. Okay? Always start with the strongest. Whatever's giving me the strongest sentiment and fundamental reading, that's where I like to tackle it on the charts. So let's just take a look at a few of these. New Zealand Swiss being the number one strength, right? And I'm going to actually put this up over here as well, just so I've got two different spots to look at this. Give me 1 second. Okay. So yeah, New Zealand Swiss. Let's go have a look. Now this thing overall, if we're looking, well, I'm on a weekly. Let's go back to a daily. Okay. So on a daily, we have started a new sequence of higher highs and higher lows. And this is after a very, very prolonged downtrend, right? If we're looking at if we're going back in history. So what we've got is a break of structure here, right here. And then we've got a higher low. So break a structure up and then a higher low. Now, ultimately, if we're talking higher time frames, I feel like the better spot to be, the lowest, the closest to the origin of this overall. I think the stronger zone would be right here. Okay. Now that's if we get back there. We probably won't because it's such a strong score. So we got to look a little closer to price on some other time frames. Okay, that's a daily right there. Pretty, if we're just looking at a daily, this is all pretty well efficient, meaning there's no gaps. There's no acceleration gaps or runaway gaps, fair value gaps, as a lot of people call them. I don't really like the word fair value gap. I like acceleration gap. There's nothing fair value about the candle. Okay? Think about that for a second. Now, the fair value would be the consolidation, obviously. But I think too many people think, well, that whole candle is the fair value, but it's not. It's really the basis of it, the origin of it, the consolidation. What's a consolidation? Potential supply and demand zones. Okay, so I have to see a gap. I have to see a strong leg out candle, because leg out candle that leaves a gap in its wake, well, that's a sign that demand very heavily exceeded supply. Okay, supply and demand 101. So a daily time frame, it's pretty efficient. So I have to go down to again, far away. Sorry about that. Somebody trying to call me. So let's go to a 4 hour. Okay, we're going to look in this area and see if we can find some acceleration gaps. Well, obviously the one that I'm looking at the closest is going to be this one right here. Okay, talk about this one here, because we got a strong gap away. And there is your gap right here. Okay? That's going to be your runaway gap. That gap is the closest gap to the order of this overall strong move up. So the idea is there tends to be unfilled orders on the other side of that. In other words, a big bank institutional footprint where they created the runaway gap, where they created this strong push away. So that right there is our candle. That's our demand zone right there, the green. Now you see I've got a few other ones back here. These are some that I created back when price was in this area, but as you can see, we've just run away. So I'm not too interested in these demand zones down here anymore, and they're on smaller time frames as well. Number one, this one here has already been touched. I had it smaller because I was looking at it on a 1 hour time frame, but on a 4 hour time frame, think about it. This demand zone's already been mitigated, has it not? Color that light green just so I know it's not as exciting to me anymore. Okay. This one down here, again, 1 hour time frame. So it's just too far away. And at this point, since price has pushed away so far, this looks a little bit too much on the narrow side to me. Okay. If I'm going to chase I want it to have a decent amount of range, especially if it's moved this of a range of a zone for me to be excited about anymore. Now, I was excited about this range when price was in this price action right here. But again, it's moved too far away. So at this point, if price just comes screaming down, it's going to be coming in too hot and heavy for this puny little demand zone, in my opinion. my opinion, just simply means from all the times in my 12 years I've seen price drop back down this quick, right? Now, it's probably not going to do that. Again, New Zealand's looking pretty good. Frank's not looking the greatest from a fundamental point of view. So really, that just leaves this origin. This is my momentum. This is my strong momentum up. Okay. So anyway, 4-hour demand. I always like to drop it another. I always like to take whatever frame I'm looking at and divide it by 4 to come down and see if I can get some confluence. Okay. So 4 to 1 hour. 1 hour time frame. Do we have a gap? We sure do. Now, it's not as sexy looking, if you will, on a 1 hour time frame, but it is a gap nevertheless. Because here's our consolidation. This is our 4-hour consolidation, that 4-hour demand zone candle we were looking at. And then again, I just want to make sure I've got a strong push away on this time frame as well. Okay, so top of this wick, bottom of this wick, there's our gap. Down here, it's efficient price action because all these wicks and all these real bodies overlap the wicks and the real bodies, 2 candles over to the right, 2 candles over to the left at the origin of the strong move. So if I'm looking at gaps, I can't really use this as the gap. And I don't want to use it as a gap anyway, because this is my unfilled orders. Okay, just magnified down from a 4-hour to a 1 hour. But the good thing is I still have this. Okay, so this is a really good spot to, again, that's a long ways away on an instrument that really doesn't move that much over the course of a day. Let me look at my ATR real quick. Yeah, 30 pips, guys. This thing only moves 30.6 pips per day. Okay, that's your range. So I ain't expecting this thing to come back today. This might be a longer term setup, over the course of the next week. Because as it stands, how many pips away are we? Okay, 61 pips away. So that's 2 days. Assuming we were to just stop going up now and just start going down, that's at least 2 days away. 2 intradays away. So obviously the rest of today, and then Monday, and then maybe even getting into Tuesday at the earliest. So I'm not going to hold my breath that it is going to come back and retrace that much, because that's 2 days of retracement on an asset that's given me a very bullish plus 12 score. Okay. So the other question is, well, what do I do now if I'm trying to get into this trade? Well, there's always the idea of going down smaller time frames, right? Now, the smaller the time frame you drop to, the more noisy it gets. So if I stay on that 1 hour, okay, we already know this. Well, the only thing I see that's that prominent is really going to be this little bit of retracement here, okay, with a strong push. So this is actually not a bad looking spot. It's still pretty far away, talking about this candle here. And I would also incorporate the candle to the left just because the wick goes a little deeper. Pull that out for a new demand zone. 1 hour demand zone. And I bet if I move that to a 2 hour time frame, it's probably going to look, it's actually not. So there you go. 1 hour time frame. Because we had a gap here, did we not? Top of that wick, bottom of that wick, there's your fair value gap, your acceleration gap. We have pierced through most of it. Okay. And this is where the people that got in, that's where the retail crowd for the gap traders, that's where they actually made some money on this, right? So I personally don't trade gaps. Unfilled orders below the gaps are always going to be the catalyst, but it just goes to show you sometimes the gap traders will win. Okay. Besides people that trade gaps, because I've seen so many of them that actually work just ahead of my demand zones or supply zones if it were flipped around. But I've also seen gaps get filled, and I've also seen supply and demand zones and bounce way more than I have the gap traders. So it's really just a matter of personally, I like the deeper discounts. I don't like to front trades like this when it comes to trading the gaps themselves. I've got more than enough patience to wait for it to hit the unfilled orders below. Because that's, again, the banks are the ones doing this. Okay, especially on the higher time frames. Smaller time frames, it's just a lot noisier. It's a lot more retail and high frequency trading, action down here. So zone that might, that would still be about a day away if we're just looking at it on an ATR perspective. That would be the absolute max for me, because if I look higher up, yeah, there's the fib 38.2 retracement area. Perhaps we could find a little bit of a zone in here, but to me, this is just slow moving action. It's not like I have any strong like I did down here on the smaller time, or on the 4 hour day, 4 hour, 1 hour. Okay. So yeah, my risk tolerance says to wait, ultimately for the higher probability, perhaps even the 50% fib retracement level here, because I do have a pretty decent demand zone. And the most important thing with this demand zone is the fact that if we look at the VSA, the volume spread candle to the right, we had a pretty candle down here. It was actually twice as much as the previous candle. So I like that as a possibility. Now, if price comes down to this zone, what would I do? What would be my way of trading this? Well, confirmation entry, guys. Okay, let me delete this. Now, first of all, if price were to come all the way down here, this would be I would be open to a limit order. Just set it and forget it, because it's at the origin of that overall strong move, the highest probability. Now, if price comes up here, though, I would treat it different. I would treat this as a confirmation entry. What's a confirmation entry? Well, let's say price comes down. Okay. Come mosey on down here. We get a bounce into the zone. Okay. I expect a bounce of some type, because orders in these demand zones, supply zones. But once price hits, I need to see it break a structure. So I need to see it break this structure. Now, it's not going to always look just like this. This is just for example. The zone and collects unfilled orders. Okay, I want to see it break this most recent swing high. So break it like this and then close. And then at this point, you usually will have a newly formed demand zone in this leg right here, this new momentum leg. Okay, it's a momentum leg because it broke a structure. So at this point, I just want to see a simple retracement, and right here would be my trigger to buy this market. Okay, because what I would look to find if I drop down to a 15-minute, remember the zone divided by 4, okay, 4 hour to 1 hour, 1 hour to 15-minute. What I would expect formed somewhere in this area. Okay, it could be your 61.8 retracement level even, but there would be your formed from right here. Now, again, if you guys like fibs, and if you like the golden ratio, you could always take your fibs, the bottom here to the top of this new higher high, because remember, it's got to be a higher high. It's got to be a higher high than the high to the left. And there you go. There's your fibs. Going right through that new demand zone. This new demand zone right here. Okay. That's the trigger. That's the trigger because it's already proved that it's at least trying. It's never a guarantee, but it's at least trying to reverse trend to the upside. Okay. Whenever this, and it's doing it by breaking this structure right here. So in other words, oops, I didn't mean to do that. This move right here, the second it breaks and closes above this swing high, that's when it's at least saying, hey, let's go explore the upper end, the upper side of this trend. Now, a lot of people will buy break. Some will get lucky, but a lot of them will lose, because oftentimes price could very easily keep going and just completely disrespect the demand zone altogether. I'm okay with whatever it does. as long as I follow my rules, it can do it the hell it wants. Right? We go back here just to make it a little easier to see here. So yeah, again, breaking this structure, and let's just say it stops there just for, example's sake. This very well could just run off without me. I haven't lost anything, but I haven't made anything. But the reason I don't just buy breakouts is because it very easily could just chew all the way through the demand zone itself and stop me out for a small loss. So there's a little give and take. I don't want to be too aggressive, but I don't want to be too conservative either. So for me, this right here solves a lot of the knot in your stomach that you tend to get when you get into a trade and you're immediately feeling it in your gut, like, oh, did I screw this up? Or, oh, damn it, should I have put on more? No. Find the happy middle. For me, this is the happy middle because it's trying to change the structure. It's trying to potentially reverse to the upside. So, and again, though, this isn't the entry. The entry is the retracement to a newly created demand zone. This right here is where I buy my order, right here. Just let it do its thing because at this point, you've followed your rules. I've followed my rules. I've seen that it's bounced through a fair value gap, meaning it's closed the gap. Gaps love to be closed. Side of it, okay, the demand zone. And then now on a lower time frame, we're trying to reverse the trend. Once it does that, just give me that one last retracement into that's where I get into the order. Okay. That's what does good for me. It's not necessarily going to work for everybody. We say it all the time on the streams and everything else, but what works for me may not work for you. What works for you may not work for me. Risk tolerance and patience level, right? I've got a lot of patience. It's something I've developed over the 12 years I've been trading. But not everybody's going to have that patience. Could I trade scalping on a 1 minute time frame, a 5 minute time frame? Yeah, I could, but I just wouldn't personally enjoy it as much because I like to look at it in a holistic way, just like the banks and institutions. Remember, all I'm trying to do is follow the banks, ride their coattails, hop on and enjoy the ride. So that's why, me personally, that's why I look at it. I try to look learning. Okay, I by no means have figured it all out yet, but all I'm trying to do is put myself in the shoes of the bankers, the smart money. What would they look at? And also, where are the retail traders? Okay, where's their liquidity losses? Knowing that the banks have to have liquidity to fuel their orders. Okay. So accumulation, distribution. I mean, there's so much that goes into it when we're looking at it on the charts and fundamentals, but yeah. What are the fundamentals telling us? Okay. What are they talking about on CNBC or BBC markets or whatever other, markets you guys have worldwide, your major legacy outlets? Or what are they talking about? Are they talking about a 5 minute chart? Are they talking about, a moving average crossover? Not typically. They're always talking about rates. They're always talking about GDP reports, inflation numbers, growth factors. They're always talking about that. So if they're talking about that, then that's where we need to be looking, the macro. Get the overall picture and look at where the banks are actually positioned in the form of the sentiment readings, the sentiment analysis, the COT reports. Are they net long this asset? Are they net short this asset? Week to week or overall for positioning, longer term positioning. Where's the retail crowd, the retail sentiment? Okay, are they net short on this asset? If they're net short, we look at it from a contrarian aspect and we look to potentially go long, okay? Most traders lose money. That's the unfortunate part about trading. 90% of their money within the first 90 days. You guys have probably all heard that or something similar. Okay? If the average retail trader is losing money, then we want to observe the masses and do the opposite. Now, that's not to say they're always wrong. sometimes they're in the right direction of the fundamentals, the macro, the trends. Okay. Because everybody's out there trying to buy breakouts to the long side or to the short side. I realize if you get a good pullback, you'll get a premium price on shorts or a pretty nice discount on longs. So anyway, a little bit of a side rant there. So yeah, that's New Zealand Swiss. So yeah, like I said, just not really a whole lot going on right here. I'm not too interested in it up here in these higher time frames. It's high on the curve. It's too damn expensive. The discounts are further down. And I even think this area here, this zone is probably pushing it. But again, if it gives me this type of price action where it breaks a structure and at least shows it's trying to move up, as long as I get a volume, a volume spike from the VSA candles, then that's a potential spot to get in a little early. Okay. I do see a handful of you in the chat. If you have any specific assets, let me know. I've got a lot of currencies I could go through because we do have a lot of pretty nice, healthy readings. But if you guys are at the top of the list, and again, I'm testing this 10 a.m. slot because I got up a little bit late this morning. I normally do 6:30 a.m., but I have just been unable to get to sleep at a decent time because I'm, trying to look up my next chapter in life, if you will, from a trading project perspective, an income perspective. Okay. I've got some challenge accounts, which they're doing pretty decently well. But yeah, long story short, I just haven't been able to get to sleep. So I forgot to set my alarm last night. And as a result, I didn't get up. I got up 45 minutes into what should have been my stream. So that was on me, but that's why I figured I'd do this 10 a.m. Central Standard Time slot. So we'll probably do an hour and a half here. We'll go to about 11:30 a.m. Central Standard Time. But if you guys like this slot, let me know. Because as much as I enjoy the 6:30 a.m. slot, I'm also realizing that, 6:30 a.m. my time is 4:30 in California on the West Coast. Right? The mountain time zone. So probably missing out on a lot of people because I'm up too dang early for them. So I would probably be open to moving to this time slot if I could get more viewers. That's really where it kind of boils down to, is where can I get the most viewers so I can help the most people possible. And we go through and we trade together and help you guys out. That's really all I am. I'm an analyst of fundamentals, sentiment, and technicals, right? I like the trifecta. The three added together make for some damn good trades. So anyway, yeah, just let me know. Let me as well, just so I can get an idea of that. Are you on the West Coast? Are you in the mountain range? Are you London? Where are you guys at? Let me know. So that's New Zealand Swiss. Let's look at CAD yen. CAD yen. Now, again, guys, just like the dollar yen, the CAD yen had a gigantic swing of its own, right? Very similar structure, big drop. And it did have this demand zone drawn up. Was that a 2-hour time frame? Yeah. So from a 2-hour perspective, I had this demand. See, it just wicked through just a little bit before slamming back. CAD yen and slowing down the position. Stop loss the right way, okay, under this little swing low over here, then you wouldn't have even touched your stop loss. If you're a supply and trader. That's 2-hour time frame. It's not really a time frame I use a lot. The reason I didn't use a 4-hour time frame on this is because if I draw up the 4-hour candle, it's already touched and mitigated in this area a couple times. Okay. So whenever a zone is touched or mitigated, that really negates it to me for future action. So that's why I didn't want to use that on a 4-hour time frame. It closed the gap. Not till you get further up this area here, right? So yeah, I dropped it to a 2-hour just to put the candle on, but is a little deeper. So the stop even a few pips below that. Oh, come on now. I have the magnet tool on. There we go. Right. So stop loss just a little bit below the swing low. And that would have kept you just fine. Plus, you had VWAP kind of giving you a little resistance on the underside of it. Okay, I just threw a anchored VWAP here at this swing low, this higher time frame swing low. Okay, and then just going right through that zone, above that zone, actually. So combination of that and just natural ebbing and flowing of the markets on releases, on high impact releases. You know, all that kind of contributed, just really stretching it out to the top side. Way back to July of 2024. And as you can see, you got a weekly, a daily, and a 4-hour supply zone. Really beautiful confluence, but that's a long ways away. That's almost 3,000 pips away. So I wasn't too worried about that. Yeah, not a whole lot left to be said on this. I mean, ultimately, the play was back here, guys. This was Sunday when the Sunday market opens here. It opens on Sundays here in the States, just so you guys know. I mean, this thing dropped. Look at this. Look how beautiful this was. At a daily demand zone. And then as you see here, I got a 4-hour demand zone. So this is my confluence. Look where this thing touched before it shot off like a rocket. Look at that. Just barely wicks into the 4-hour. And then just unloads to the upside. Okay, this is the Sunday open. Gap down. So gap down and then just perfect. I did not get into that trade because at the time I was looking at New Zealand yen. If you guys want to talk about a slap in the face, let's go look at this. That same price point is right here because on New Zealand yen, on Kiwi yen, we had the same thing. We had a daily demand zone. Okay. It's going to be this candle here, that daily candle, because we had a gap up. And then inside, we had the 4-hour. So the confluence I like to look for, this 4-hour candle back here with a gap. And as you can see, I had an alert set. I had my alert set right here. I've since moved it because now I'm looking at this candle, but I had my alert set just ahead of the proximal line of the daily. And I was sitting here watching this damn thing and it just missed the confluence. It just missed the 4-hour demand by what? 2 pips, 2.5 pips. So that's the trading gods looking and laughing. I just missed my entry. And as you can see, it just took off. It just shot the hell up. So I'm a little butthurt about that, but at the end of the day, I did not break my rules because for me, my rules explicitly stipulate, and I have them written, that I have to wait for the confluence touch, the 4-hour daily. Okay, so there you go. And as a result, probably had the best move of the year, of the last few years up, as far as the momentum, the strong momentum up, the break of structure, all that. So it's pretty expensive at this point. Price again, New Zealand yen, same story. It had a big decrease with a rebound. So that's where we're at. So it's really just kind of a weird area right now. We got the range of this morning's candle. It's basically here, right? So there's your range. So what do we do with this? Well, the safest thing to do is wait for a breakout. Wait for a breakout of the top side or the bottom side. We have to keep in mind we've got intervention potentially right around the corner. So you definitely don't want to be highly levered if you're doing a longer term swing, swing trade or obviously a position trade in the long side. And if you do, you better have some pretty good stop losses on there to avoid the potential intervention play. But I think the safest thing to do is just to wait. Okay, wait, especially if you're a newer trader. Just wait. Just like the dollar yen, the pound yen, the euro yen. Just wait for a break of this structure and then look for potential retracements because you don't want to buy just a breakout, like I kind of alluded to earlier at the outset. For me, look for the breakout. Now, you will get a lot of people buying here. They're going to have their buy stop orders. But then what tends to happen is price gets thrust right back into the zone to search for demand because the banks know that people are going to be placing their buy stop orders here. So wait for a retracement. For me, I'll be waiting for a retracement to a new demand zone form somewhere in here for a buy long. Now, that's a little bit higher time frame of a play, but yeah, just looking at it from a 30,000 foot view, that would be a decent swing trade for me, assuming that the fundamentals and the sentiment are still where they're at when we're talking about, the very bullish score. So right now, very bullish 10. That's very strong. You got seasonality going against a couple of these yen pairs, and that's it. Everything else is either blue or neutral, meaning they've met expectations. But there's a lot of exceeded expectations in a lot of these reports up here. The blue, several crowd sentiment going against the grain. Remember, if this crowd this is your retail sentiment right here. Crowd sentiment says that the average retail trader is short this asset, short the New Zealand Swiss, short the CAD yen, short the pound yen, the New Zealand yen. And again, if the average trader loses money, do we want to follow this set of people? No. We want to observe the masses and do the opposite. So that's only one item in this list. This is not the end all be all. This is what I thought the end all be all was a handful of years ago, but then I come to discover the Edge Finder, from Trader Nick, A1 Trading, which is what we're looking at here. And then understanding that we got to look at all the growth factors, the inflation factors, the employment factors, and the COT report as well. So we can see what the smart money is actually doing. That's the ones we want to follow. We don't want to follow the crowd. So on all these assets, the average retail trader is short. So if they're short, I want to be long. And that's why it's giving me a score, a bullish score. Okay. So yeah, let's take a look at a couple of these other very bullish ones. CAD yen, pound yen. Let's go look at those because it's probably going to be a very similar story. Okay. About waiting for a breakout. Yeah. Same thing here. There's your CAD yen, and then here's your pound yen. So in all these cases, we're basically inside of that gigantic candle that was formed this morning. So it's just kind of in no man's land. I mean, I'd really like to get in. Perhaps we can assume this leg is going to continue up, because if you skip the candle on the report release, then we start looking at the price action prior to it. This is really just kind of a continuation of it, is it not? So at this point, perhaps we could drill down into a smaller time frame and find a zone here from this leg here. So I don't want to say ignore the strong leg, but I'm just saying now that it's kind of regrouped and the volume spread analysis, the trading activities kind of come back to normal, the dust is settled. Well, now we could potentially look here and see on a smaller time frame if we have a trade. So let's drop from a 1 hour down to a 15-minute just to see what we got. Okay. Now we have to also keep this in mind with where price is. Just looking at this on a 15-minute time frame, what have we bounced into? Supply zone. That's a 15-minute supply zone. And needless to say, the leg out candle, that's pretty dang strong. Okay, we're talking about this yellow candle. And then the retracement was even stronger of volume, but on the lower range. So the green candle that retraced, that bounced off this area, think about it. It's half the range of the leg out, but almost twice the volume. So is that a mismatch of effort and result? Okay. Wyckoff theory, Wyckoff 101, effort versus result. Meaning if a candle is a big candle, an expanded range candle, if it's a true move, then it should have, the volume should be the same strength. Well, this drop, this big candle down, think about it. Let's look at the volume down here. Get an idea of the average size of these candles prior to this big drop. Okay. Pretty small candles, right? Pretty small volume. On this big drop, this big gigantic red candle, that's this candle down here for the volume spread analysis. Now, was that really that much of a change compared to these previous candles? Think about this for a second. Let me zoom in a little bit. Well, actually, let me just do this. So this is a big point. This is a very big point. This is effort versus result. This big candle, if that candle was that big, then this volume should have been way higher, way bigger. But it wasn't. It was bigger than the previous candles, but it wasn't even it wasn't even twice as big. yet the candle was like 8 times bigger. So that's effort not matching the result. So to me, when I boil it down to looking at it from that prism, it's kind of a false move. It's kind of a fake move. And that's why we didn't see any follow through, because we didn't have the volume matching the result. Candle could very well be another say that, because the volume was twice the size of the previous candle, but the size of the candle was only half the size. So that's another example of effort not matching result. Okay. Again, if this were a true move up, then the volume would have been about half that of this candle. My nose is itching like crazy. Sorry, guys. Give me 1 second. Okay. So that just basically translated into a lot of people not knowing what the heck's going on. And that's why I say, when we finally break the structure either up or down, then we get a little bit more of a realistic look at what's going on, because this is nothing but uneasy traders. Okay. And then the volume has kind of dried up. It's still a little more elevated, obviously, than the previous candles. Pretty well low. It's pretty well back to normal. So I really just need to see a break of structure, because at this point, again, we are in this supply zone, this green candle before that big move. Okay, forget volume for a second, just the size and sheer scope of that move. It was giant. So for me to get excited about getting into a trade on this, I don't know that I really want to be playing around in this area, because this is just uneasy retail traders. I don't see this as institutional traders in here. If anything, this was the potential institutional trade right here, but it just done nothing but created a lot of confusion. So yeah, if we can show that we can break that supply zone, break the supply, and then retrace to a newly formed demand zone in this area, well, then I'd be interested in the trade. That's what I'd be interested in. But as it sits right now, so long as it's in this range, I'm just not too excited about it. Okay, talking about this range. Talking about that range. And this is going to be the same again with all the yen pairs. We got to get out of this range for me to, in my opinion, to make a better judgment of what kind of play to do. Okay, so that's the yen pairs. I think I'll just skip the rest of those, because it's really going to be a exact same thing, guys, on all these. CAD yen, Aussie yen, again, Euro yen. See, everything is inside of the range. Everything's inside of the range, with the candles, the big strong candles that were not matching the effort. The effort did not match the result. So I'm going to probably just ignore the rest of these yen pairs for the day. Just give it a chance to break a high, break a low, whatever the case is. Euro yen, there you go. This is another demand zone I had formed. It's no surprise. It's really no surprise that that price action came all the way down to this 4-hour demand. Just wicked through a little bit, but then came back up. So that's just, there you go. You know, even though I don't want to trade during those news releases, that 5 or 10 minutes before, that 5 or 10 minutes after, you know, price. So anyway, that's enough of that. Let me see what we got over here. Yeah, so we're going to skip that. Aussie Swiss is the one I made some money on earlier this week on this demand zone bounce down here. So this was my confluence, okay, my daily 4-hour confluence. Bought into the trade here, closed it up here, and I closed it out too dang early. I got to be honest. I closed it out somewhere in this area on a smaller time frame. I choked my stop loss a little too close. Talking about my trailing stop. Okay, I ended up choking my stop under. Well, first of all, I brought it to break even after we went a 1-to-1, but then when we made this break of structure here, I moved my stop loss here. And then at one point, I actually, instead of leaving it down here, I actually choked it a little too close, because I was putting it down here. There was a 5-minute demand here with the strong push. So I actually moved my stop loss to there. And look what happened. It broke through and closed me out for a profit. and then just kept going. So that was on me. I shouldn't have looked at a 5-minute time frame. I should have just kept it on the 15-minute like I was looking at. But hey, it's tough, man. Sometimes it can be tough. You see a pretty good unrealized profit in your account, and you don't want to see too much of it go away. So it just kind of got me there. But the good thing is I made money. I just didn't make as much as I should have. Let me see what else we got, guys. Nikkei. Well, first of all, just to finish up on Aussie Swiss, I do have a new demand zone down here that's kind of formed. Now, I'm not too excited about this because it is pretty high up. If we're looking at curve analysis, okay, swing low, swing high, and just recognize that we're currently in the top third of that quadrant, the curve analysis. It's not an analysis you probably hear about a lot, but it is a pretty good technical indicator of just seeing, hey, am I buying in premium, which I don't want to do? I don't want to buy something at expensive prices, or am I buying in discount? Well, the discount zone is the bottom third, as that's where I'd want to be buying overall. If I'm shorting, yeah, I'd be wanting to short up here. It's at all-time highs. Not all-time highs, but I mean, it's at recent highs. But I don't want to short something that's got a strong uptrend, do I? No. Not unless I start showing a series of lower lows and lower highs on 4-hour time frames, preferably daytime, daily. Definitely don't want to sell, but I don't want to buy in a premium either. So yes, I have an alert set here on the higher time frame, and that's because I drop it down to smaller time frames. So this is just really where risk tolerance comes into play. Hey, do I want to trust my skill? Do I want to trust the market to give me a retracement back to a demand zone, even though it's at very high prices, higher time frame? Or do I just want to let it go? So really, it just boils down to I'll wait and see what happens. Say, got an alert there. It's basically a 2-hour demand I was looking at. It did break a structure. Now, this is the same thing as that very first trade opportunity I showed at the outset. This is nowhere near a limit order. Absolutely no. But it could be a potential confirmation entry. Okay, decline, hit the zone, break structure, and then retrace to a newly formed demand zone. That's really the play. If it does that, great. I'll give it an opportunity. If it doesn't, c'est la vie. Okay, I'm not going to get involved in a trade unless it meets my rules. I do not want to chase price. But if I get a break of structure like that, right here, then I wait for a retracement to a newly formed demand zone, and then we could potentially give it a look if we have volume spikes, okay, volume spread analysis. If we get RSI showing a divergence as well, right, relative strength index. Hey, what's the momentum shifts potentially looking like? So it's really just a matter of adding and incorporating every single one of those odds enhancers as confirmation to give it a shot at a higher price, more closer to the premium on the higher time frame. Okay. They're not my favorite trades. I prefer waiting for discounts. Okay? I prefer shorting when it's high on the curve. But if I don't have a whole lot of other assets hitting or prices are a ways away from alerts, hey, I'll come down here and play around, test it out. I just won't be putting on a full risk on it. I'll be putting on half a risk or maybe even a third of the risk. Come out of that. So that's the play. That's the plan on Aussie Swiss. It's already paid me this week. I don't want to, yeah, I'd like to go back to the well to see if it can, provide some more water, but I don't want to risk it because I've already made some money from it. And because it's too expensive. Down here was cheap. Okay, down here was much cheaper because daily 4-hour swing high and then swing low, especially if you look at it from the 4-hour, 1 hour where we actually enter the trade. So anyway, that's it for Aussie Swiss. Let's look at the Nikkei. The Nikkei was another one that came close to an alert of mine, earlier in the week, but just missed it. Okay. So I was looking at this daily 4-hour demand zone confluence. The yellow is the daily. The green is the 4-hour. Gap up, price broke this structure here, and then retraced last Friday, I believe it was. And then Sunday, no, I guess it wasn't Sunday. Let me see. It was Tuesday. I'm sorry, this Tuesday. But it touched the daily zone. It just did not touch my 4 hour. Just missed the 4 hour by, a few points, a few pips. Okay. So again, I did not break my rules. I stuck with my rules and avoided the trade because it did not meet my criteria, which is daily 4 hour confluence. So you see, I kind of drew up a disjoint channel price action here. That was basically a little bit of a megaphone pattern, okay, just to see if it was wanting to do that. In other words, test the boundaries of that, because what happened is we had a consolidation, a high, a low, and then we had a lower low, then we had a higher high. So I was looking for the lower low to come back and test this, and it didn't do that. Consolidation. It's basically master pattern. Consolidation, expansion legs, trend legs. So I was looking at this as an expansion leg set, and it worked for a while. Okay, we did get the lower low, but got the higher high, but we just never got the last retracement I needed to fulfill the pattern, but also hit my unfilled orders from the demand zone. So at this point, I'm actually just going to delete that because I don't need it on here anymore. That's nothing more than an odds enhancer. And that's not a reason to get in or out of a trade, what I just showed with the disjoint channel tool. It's just an odds enhancer, kind of a filter, just like fib retracements. I don't use that as a buying or selling decision. I just use it as a filter. Hey, show me where the liquidity's at. Show me where retail traders are making bad decisions and getting into trades that they shouldn't be getting into. So that's the way with all these indicators that we have. I mean, there's 1,000,001. This should not be your reason to get in or out of a trade, meaning, or specifically your entry. Okay. Stochastics is not a reason to buy something. Okay. Support and resistance. Okay. Might be a hot take, but that's not a reason to buy or sell something. RSI, rate of change, pin, I mean, everything. There's all, VWAP. Okay. All these items are just nothing more. They should be you out of bad trades and in good trades. But what really moves the markets? Okay, the banks, man, the unfilled orders, the footprints they leave in the sands. So in other words, the supply and demand zones. That's the way I see markets, and that's the way they read the markets. Okay. Thedo, good morning, good evening, wherever you're at. Pound yen, what's your take? And when it comes to the yen pairs, Thedo, I'm really kind of against trading any of them right now because of that release that we had this morning. From a fundamental point of view, it's a pretty damn good score, is it not? You got a +10. You have, so the only thing going against the bullish narrative is the manufacturing sector of the PMI data and the unemployment rate. That's it. Other than that, you got quite a few met expectations on the jobs numbers, the inflation numbers, but on most of the inflation numbers and a handful of these economic indicators, your retail sentiment, so sentiment analysis, technical analysis looks pretty good, right? So this is all screaming buy. But when it comes to the yen pairs right now, save, kind of want to see it get out of the range it's currently in. Remember, we had the Bank of Japan come out this morning and keep their rates the same as expected. So you had this big, gigantic drop, and now you've had kind of a sharp retracement back to the midsection, and then a kind of a slow uptrend here. Kind of basically going in line with where it was going before the release, right? So kind of like what I said earlier, just cut out the candle, which is important, but the idea is if you cut the candle out and you kind of attach the recent price action to the previous price action, it's pretty well doing the same thing. So technically, I love it. But what I don't love right now is the fact that if we're looking at it on a 15-minute time frame, we bounced right into a supply zone. So in other words, the candle that formed right before the release of that report, that's a little bit of consolidation, but then you had the screamer down. So what does price often do in supply and demand zones? It bounces. And as you can see, it's came in and bounced. So I don't know that I want to be, me personally, I don't know that I'm excited about trying to sell this market or buy this market unless we get a breakout of the range. So I kind of drew this up earlier. If I just, draw a box around that whole range, I really just prefer not to get involved unless we break out of that range. Okay. Whether it's the top side, the bottom side, whatever. Now, I drew this up earlier. If we do get a breakout of the range, meaning it disrespects that supply zone and closes up here, well, now I'd be interested in getting into a trade on a retracement to a newly formed demand zone for a buy to the long side. So that getting involved if price just remains in this zone. Once it gets out of that zone, then that's proof that, okay, the bulls, the demand exceeded supply, broke through some supply zones. And again, you're going to get, like I said this earlier, you're going to get people right here that have buy stop orders. The banks know that. They know the liquidity is there. They know there's buy stop orders, and they know they're going to be putting their stop losses down in this area somewhere. So what I would see happening is, if I'm a bank, if I know that people are going to be waiting here to buy your stop orders, if I'm a bank and I know that, then I want to find their liquidity, because I have a much larger position than them. I have $1 million position, $500,000 position, whatever the case is. So if I know that buyers are here, okay, buy stops. Well, where's their shorts? Where's their sell orders going to be? Their stop losses down here. So again, I would let price raise a little bit in their favor, but then I would turn around and slam the brakes and push price down to collect their stop losses in this area, which are sell orders that those banks need to fuel their buy orders, right? So I would be wanting to buy, me personally, down here where the banks are. And hell, they could take it even lower. They could take it all the way at the opposite end, right? Because there's going to be liquidity down here as well. Because you did get quite a few buyers in here. We know that because we saw the volume spike. So I guarantee you there's more sell orders in this area, which is the opposite of their buy orders, right? It's their stop losses. So in this area right here, you're going to have sell orders, liquidity, a liquidity pocket. Liquidity pocket. Let me just get this out of the way for a minute. Okay. You're going to have another liquidity pocket right here. Okay, there's another liquidity pocket right there. These buyers that push market up left their stop losses somewhere. Now, some of these buyers could have, widened their range and put stop losses down here as well. But you're going to have some that are choking out their, not giving themselves enough room to function. And they're going to be putting stop losses here as well. Remember, they're red. I colored this red on purpose because these are sell orders. There's sell orders sitting here. There's sell orders sitting here. Maybe even this range right here. You could be having a little bit of a pocket of sell orders there as well. Come on, damn it. Move. Sell orders. Now, I think ultimately you're going to have a lot more sell orders down here, meaning stop losses. Because again, you've got these buyers that put their stop losses here. You're going to have a load of buyers here that drop. Buyers here that push price up and into the supply zone. Oh, by the way, some of them putting their stop losses here. Some of them are putting their stop losses here, and then some of them are putting their stop losses here. So this whole area down here, I think, is probably going to have a pretty decent amount of liquidity. Now, it really just depends on how far price the banks and institutions want to move it. If they want to make a quick buck, they'd probably be wanting to get in fairly, somewhere in this area where this liquidity is at. If they want to build a bigger position, however, think about it. They're probably going to want to drop price all the way down below this area to collect these sell orders as well. And then once they collect the sell orders, the liquidity, okay, then they can push price up a lot easier. And oh, by the way, there's even another demand zone. So here's another potential launch for them. Look at this. Is this not a demand zone over here? Try that again. Is this not a demand zone right here? Okay. There's your daily candle, or daily. I'm sorry, this is your 2-hour candle. So we've already shown liquidity here. Let me. Okay, yeah. So we've already shown there's liquidity here. Scooping it up to add to accumulate their order, and then the last, their point of no return down here to collect the unfilled orders to ultimately launch their price up. That's what I would see. I could see that happening. But again, we just never know. Maybe they only want a little liquidity right here. Maybe they want just a little bit more liquidity right here. Maybe they want even more liquidity. Or maybe they would target that demand zone. That's kind of the way I see it. So I personally will put an alert down here because you guys know I like discounts. Let's see here. I'm just going to put this on through next week, into next Friday. Okay, so there's my alert through the end of the intro week next week. We got alerts going off, ladies and gents. So let me see what we got. And I'll be out of here, by the way, in about 15 minutes. So that's it for pound yen. Okay. Hopefully that helps you out there, Thado, on that. And as you guys just probably heard, I've had some alerts go off lately. So I got a dollar yen and I got a New Zealand yen. Okay. So these just went off. So again, all the yen pair. Oh, look at here. Okay. Dollar yen. We've exited that range. Hold on a second. Come on, you silly thing. Reset. Look at this. Dollar yen, guys. Okay. We finally broke through the bottom of the range. Oh, okay. Hold on a second. Ooh. Intervention bugs going on. I don't know. Look at this. This thing's playing out perfectly. So dollar yen, remember, I wasn't worried about that demand zone because I knew this report was coming up. But now look what's happened. Okay. This is where price dropped this morning. But remember, there's sell orders right here. There's liquidity here. What's below that liquidity? A demand zone. What kind of demand zone? A daily and a 4-hour confluence. Okay. So we just need a little bit more of a drop from a technical aspect, and that would be a good place to be buying. But remember, it's not giving me a bullish signal. Dollar yen isn't. Dollar yen's only giving me a neutral score of a 2 at the moment. So just because it's hitting a pretty sexy looking technical level doesn't mean I want to be hopping in this thing. Yeah, that's a pretty strong drop. What did we have any other release? We had some news come out, didn't we? We had to have. Let me go refresh my fundamental reports real quick. Okay, it's 11:14 a.m. Nothing else. So we don't have any other higher impact news. Did we have a geopolitical event just come out? Let's find out. Forex, Wall Street, blah 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 blah. Go almost at $5,000. An ounce silver is almost at $100 an ounce. Almost. That's crazy. But no, I just want to see, did we have anything? Because that's a big drop. That's a pretty strong drop. Just want to see if we had anything new come out real quick. Blah, blah, blah. No, it doesn't look like it. Let's go back to the chart. Yeah, I mean, that's basically it. So you got liquidity down here. Oh, man. I would really like to buy. All right, let me flip to New Zealand yen real quick because that was my other alert. All right, I'm going to – it's clogging up everything. Yeah, so see, this one is still within that range. So I'm not interested in anything New Zealand yen at the moment. But dollar yen did break the range. It broke this swing low, remember? This was 1:30 a.m. my time when I'm asleep drooling on my pillow. Man, if it was giving me a bullish score, I'd be in this long all day. I really would. I got the hiccups. They won't stop. Let's go look at the 1-hour chart. See, look at this 1-hour chart. You guys see I drew up a white line there? That's a gap. That's a 1-hour gap. Oh, by the way, there's another gap just below it, I think. Yeah, right there. There's another gap. When I say gap, that means there's a demand zone underneath, even on these smaller time frames. Okay. Delete that so I can redraw it. So there you go. There's a gap. So there's a demand zone candle on a 1 hour time frame. There's one down here on a lower time frame, or on at the origin of the strong move. The challenge with this one down here is there's no volume. There's no trading activity. So am I excited about a zone that's formed with the lack of institutional movement, institutional, participation? No. That first candle really starts right here on this candle here. So that's why I drew this as a demand zone, because this is the zone that was created with the leg out. And then right after, okay, we're looking at the gap. And that's really where potentially some institutional demand started, taking over. It only lasted a few candles. So basically an hour and a half, it looks like, hour and a half worth of candles, but price screwed up. So yeah, I do like the 1 hour, the top 1 hour, not the bottom one. In fact, I'm going to delete the bottom one there because, again, there was no volume down there. But now we've got price touching the 4 hour demand. And all I really want to see, if I'm not going to place this trade because, again, it's not giving me a bullish reading. But if it were giving me a bullish reading, then I would want to be purchasing after it touches the 1 hour, which it's pretty close to doing now. Why did my thing disconnect on me? I don't know why it did that. There you go. So that's right there, a potential entry. Now, I wouldn't just buy this, even if this were giving me a bullish signal, I still would want to see potentially a confirmation entry. Let's go back. Yeah, definitely a confirmation entry, because when we look at this candle on a 4 hour chart, okay, when we look at the volume spread analysis, we're looking at these candles, and that's not exciting. That's not that exciting, guys. If this leg out candle had a candle like this one over here on the volume spread analysis, that'd be a different story. But the reality is that was the candle right there that we got. So that's not a lot of excitement. Just like it really wasn't a ton of excitement on the 1 hour time frame either. So I would let this go because of the lack of institutional activity. And as a result, it very easily could probably just chew right through this confluence. So just keep that in mind. Every time you guys hear me say daily 4 hour demand zone, supply zone confluence, that's with the caveat that it was created with a VSA candle that was pretty strong. Give me 1 second, guys. So hopefully that makes sense, but even so, zones are powerful. It very easily could make a bit of a push back up, right? A mean reversion. It's very possible. I mean, you can see we got a lot of trading activity taking place over the last, 8 minutes now? Who knows? Is this the start of the Japanese intervention? We don't know. But when I see candles like this, yellow and red candles, the VSA candles, the volume really start picking up, that's a potential sign. Now, keep in mind also, we had the stop loss orders over here get hit. Right? There's stop losses down here, right, because of the people those buyers, and then these buyers, and then these buyers. Remember, there's going to be liquidity here from all these little pullbacks. Some are going to put their pullback, their stop losses below that exact swing, or maybe this swing. But at this point, what's happened? A little bit of a waterfall. Okay, on this candle, these stop losses got taken. On this kind of the end of that candle / the second candle, that candle took these stop losses out. Okay. And then now you've gotten these stop losses attacked, this liquidity taken. So this is a very convenient spot to get into a long order under normal circumstances, but this ain't normal circumstances because I'm not getting a bullish bias on the fundamentals or the sentiment at the moment. Okay. And remember, there was not, from my view, a ton of institutional activity that took place during the creation of the demand zones. Just not at all. These are weak candles down here. These are very tiny. Okay, there's nothing to that. Even if I had the bullish signal, okay, I'd still potentially test it out or put in like a feeler trade I just would be dropping the risk a lot, like maybe over half, or drop 2/3 of the risk. Just get in and just kind of dip your toes in. I just don't want to do that even with a small position because of the fact that, yeah, those things I just mentioned. So that's dollar yen for you. Let's go take another look at New Zealand yen since it screamed at me. It's getting close to touching as well. So remember, even over here on the New Zealand yen, just go to a 15-minute time frame. So just remember, there's stop losses here. They're going to be sell orders. Okay. So at some point, if I'm an institution, I want to attack this liquidity. But do I have a good demand zone underneath that? I don't know. Let's take a look. I don't think I do. Okay, here's our 4-hour time frame. You got one way down here. Now, again, it's quite a long ways away. So if I'm looking a little closer to price, you kind of had it slow down dramatically here. You kind of based around sideways here for a couple candles or so before having another big push up. So if I'm looking for a demand zone, I'd probably be looking at something like this. Okay, there'd be a 4-hour demand zone there. So I'm basically looking at this candle because with this leg out candle, the candle after it left a gap. Not strong of a gap, not very strong of a gap, but a gap nevertheless. In fact, I would probably move it to the top of this candle because from here, that gives me a much stronger gap up. In other words, this candle here that I just highlighted, there's your gap. That's a pretty small gap, isn't it? That little white spot, that's a tiny, tiny gap. So why not maybe give myself a little bit more of an entry? And for the demand zone candle, let's just put it to the top of this candle instead. So now I'm incorporating this candle, and then my gap looks a lot stronger from here to here. That's a lot stronger of a gap, is it not? So it's going to decrease the reward to risk ratio a little bit, yes, but it very easily could be the linchpin to bounce in and push price back the opposite way. So I'm going to put an alert just ahead of it. And because we are middle of the day on a Friday, I'm going to put my alert out through the end of next Friday. Because I don't really like the idea of trying to get into a higher time frame zone today, meaning a daily 4-hour demand supply zone. Because I don't want to really hold my trade over the weekend. You just never know. With the craziness in the world today, geopolitical tensions, tariffs, Greenland, Russia, Ukraine, right? You just never know when a tweet or a Truth Social post could completely flip everything on its head. So for me, I would rather this thing hit on Monday. If it hits on Monday, it's game on. Yeah. And again, it's a confirmation entry because the volume is really not the greatest. I mean, the 1 hour, it looks okay, but 4 hours is not the greatest. So that's a potential play there. Collect this liquidity and come down for these potential unfilled orders. And then we potentially buy long like that. Just like that. I ultimately, though, would prefer that it follows what I drew up earlier. We break this structure here. We break the economic release candle from this morning and close before retracing. This is my wish, but does the markets care? The market's going to do what the market's going to do. We're just all here along for the ride. So a couple potential plays there. I would feel more excited about the green one, but if it does the yellow path, okay. But confirmation entry and decrease the risk a little bit. A feeler position. So that is New Zealand yen. So that pretty well takes care of our alerts that have hit recently. I'm going to delete those. Come on. Come on, you silly thing. Hold on, I'll refresh this real quick. I don't know why it's hung up on me there for a second. Okay, New Zealand yen, get off of my screen. Get off my screen. Like, there we go. Thank you. Thank you very little. Pound CAD, that one's another alert that hit. So this is one where I was looking at it on I think a 2-hour time frame perspective. Yeah, 2 hour. So kind of this supply zone area up here. I didn't look at it on, oh no, that's a 1 hour. I'm sorry. 2 hour. Here we go. 2 hour supply. So consolidation, sharp decline, gaps left in its wake, broke some structures. Now price came back up and actually touched it when hour supply right here. And what did it do? It wicked in and dropped further. So I cannot utilize this in the aspect of a 4-hour time frame anymore. I have to maybe look at it on a 2-hour. Now I don't like to do this under normal circumstances because if I were looking at the 4-hour, there's no way I'd want to short in this area. Yes, though on a 2-hour, that changes things. Okay, that moves it up to the bottom of the 2-hour candle, which you can see the wicks missed. So I don't know. I feel like the best move is obviously from the 4-hour, and then you just ignore this whole price area. But actually, in fact, 100% now, because see, when I put that alert up, we had a bearish rating. We don't have that anymore. So that's an easy reason to skip this. Okay. So yeah, no more pound CAD. So I can delete that one as well. Yeah, I didn't realize that it had fallen off the list. In fact, pound CAD, where did you go? Pound CAD. Okay, yeah, look at that. So pound CAD now is only a neutral score of a 1. So there's absolutely no way in hell I want to be shorting that market. I'm just going to let it go and do its thing. So let's delete that. This is another one I was looking at shorting. Okay, Tesla. So Tesla is kind of a similar story. Identified a 1-hour supply zone up here. I think it was. Yeah. Let's go back over here and look real quick. And you see I've got a VWAP line above it. We'll talk about that in a second. So here's your 1-hour supply zone. About trading supply and demand zones is to find something wrong with it. Because if there's something wrong with it, that's an easy excuse, an easy reason not to trade it. I like to think of myself almost as a retired trader, meaning it takes a lot to pull me out of retirement in order to place that trade. Everything's got to be looking perfect. So my is, do I have a fair value gap? Number one, which I think it give me the absolute smallest gap. So we're looking at, this is my supply zone candle. This is the leg out candle. And then there's my gap. So is that not just the cutest looking gap you ever saw? Does that really prove that that supply heavily exceeded demand? Not really. But as I always say, it was a gap nevertheless. So, and then, and the other -1, if you will, is the fact that we didn't really get a whole lot of continuation. It broke, kind of went sideways for a while, and then got the break. But a couple things I did like whenever I brought that zone forward is the fact that we had VWAP. We put a anchored VWAP to this top of this higher time frame swing high, and we just put it on there to see where it came through. And lo and behold, as you can see, it's coming right through the supply zone. So that in itself was one of the main catalysts as to why the hell I even paid attention to this thing to begin with. But yeah, the way it exited over here, the more I look at it, the more I just disapprove. This is a confirmation entry, which I kind of got. Okay. So just dropping all the way down to a 15, you can see the higher highs, higher lows persist. And then we start a lower low here. Okay, lower high here. Definitely a lower low here. And then this was pretty much the break of structure. Because if you ignore this big, strong leg up, you kind of had it start basing here. So I was basically looking for a retreat, a break of that structure down, which we did get, but it was not a close. So again, it wasn't that strong. Now, if either one of these candles would have came and closed down here, that would have made me feel a little bit better about waiting for the retracement up to short it at a new supply zone. And the facts is, it had a supply zone on this candle here, but because it didn't break this structure down here and closed with any gusto, that told me that all bets are off at this point. Because as you can see on a 5-minute time frame, all we had was big wick rejections down here. I don't want to see that if I'm trying to short the market, because that's a very bullish signal right there. Oh, by the way, with very strong ultra high volume. So no thanks. At this point, it's a done deal. Okay. staying out of the trade. I'm glad I stayed out of it. But for a minute, I felt pretty good because it did break the structure. It just unfortunately didn't have the strength to close. So there you go. That was Tesla. Now, obviously, Tesla had some pretty good. Also, they had some pretty good. Elon Musk spoke at the WEF, the World Economic Forum, and he was talking about the progress that he's made and they've made as a company, all of his companies. So that's really another reason to stay away from this as far as shorting, because the markets like the news. The whole reason I even wanted to look at shorting Tesla to begin with was because it originally, if we look at the stock box, by the way, this is another Trader Nick. Yesterday, when I was looking at Amazon, it was actually given a bearish score of a -5 or a -6. But today, it's actually, I think, strengthened just a little bit. Yeah, there we go. Tesla, -4. So remember, this is a little neutral now. There's not a really good reason to be trying to go out and short the markets. -7. So yeah, that's about it, guys. I think I've went through most all of my stuff. Again, yen pairs, I'm just waiting for some breaks and retests, higher time frame stuff. I feel like there's a lot of retail traders just sitting around with the twiddling their thumbs thinking, well, what the hell do I do? Well, we'll know whenever price breaks the structure, because that's where the banks and institutions like to pop their ugly heads in. Okay. And then the master pattern kind of goes into effect: accumulation, distribution, expansion legs, and then we'll find a trend phase at that point. So anyway, that's all I got for today. Let me know if you guys liked this time frame. If you do, then I perhaps will maybe add it onto my list for next week as well, so I can incorporate more West Coast traders and Mountain Standard Time, because I don't, I just want to get as many people in as I can. So I may play around with it again next week, but I'll definitely be back at 6:30 a.m. Central Standard Time on Monday, and I'll set my alarm this time. That way I get up on time. So we'll then. But that's all I got for you. So with that, have a wonderful Friday. Peace and grace. I'll talk to you next week.